Hello, it is late August 2011, and it's been a few months since my last silver in two different markets update. The two different markets contain of New York time, that is from 9:30 a.m. to 4 o'clock p.m., and the other time frame is the other hours that was not included. And this chart includes a New York time frame, which is very interesting how this is played out. Now, how the calculations work within this is we take the for the New York time frame, we take the close and we subtract the open and find out how much it gained. Therefore, this day, the first day it came out, it was explosively hot, gaining multiple percentages. And then in here, we seen it go down a little bit. But if you look at, say, for example, the 1st of May, SLV goes down, yet gaps open at 142.45. That meant from 4 o'clock p.m. to 9:30 the next morning on May the 2nd, the silver price went from 13 well, they did a reverse split or a regular split, but it went from 1387 to 1425. That's a significant gain, and it kept on doing that for a quite a few of a lot of different times it did it. I'm trying to find the right words, but it was constant. Kept killing the market to the downside on this particular time frame. So again, let's take a look at this. 2006. Well, a major downtrend New York time frame, which meant on New York soil, or from 9:30 to 4 o'clock, silver was down a total of 51.42%. Yikes. Whereas the other time frames, it was up 45.2%. The next year, U.S. time frame, we had another downtrend, down 17.6%, whereas the international market's up 38.6%. 2008, there's the big move right there, down 34%, yet it was actually up on the capitulation year on non-U.S. soil. Other than that, too, notice how New York time frame, this thing tops in the summer. Well, the actual silver price topped in March. What this meant was for a few months in here, it was one of the rare occasions where the U.S. time frame was outperforming the other one. But then the big crash occurred. And the bottom is late November. Yet silver bottomed in late October. What that tells us is from this point to this point, they really crushed the market in here, but that only occurred on the U.S. soil. In 2009, the market was higher, and the only year it has been higher on U.S. soil, up 36%, where internationally it had its worst year since the start of SLV, only up 7.95%. 2010, silver market had a miniature gain, but really a sideways year on U.S. soil, up 10%, internationally 65%. And finally, so far this year, down 3.89% on U.S. soil and up 43% on non-U.S. timeframes. In fact, we notice that we're back within this range that we've been in for the last 2 years or so. Well, that's only on New York timeframes. If you do some Fibonacci retracement from this high to this low, you'll notice that they connected very, very well. Let's move on and take a look at this on the last 83 periods. And we can see a little bit of a difference here as previous resistance or support, is now being used as resistance or a potential. And it's just in a major downtrend. The strength is 23.9%, where in contrary, the regular daily time frame has just gotten above the 61.8. A major difference. So basically, the only thing that I do is I ensure that the market always opens where it previously closes. Therefore, when the market would open here, it would not have opened on my schedule at 139.2. No, it would open at 138.12, basically. And for calculating the other time frame, all you simply do is you take the open and you get out of the close, subtract it from the close, because by playing silver on the non-US time frame, basically what that means is you buy silver at 4 o'clock in the afternoon, and then you sell it at 9:30 in the morning. Plain and simple. Now, whether or how the market reacts from 8 to 9:30, I don't know. I'm using data from Yahoo Finance, the SLV. This data is free for download. And when you go to Yahoo Finance, put the SLV in, look for historical prices, and on the bottom you will see download to spreadsheet and get a CSV file. And you could try this with many other different funds. Gold is very similar to silver this way too. But moving on, this would be the 5-day chart of the SLV on New York time frame. Pretty much the weekly, but it doesn't look for holidays. Rather, it just finds the last 5 days and it automatically gave me this. Okay, so there's really nothing too exciting about this. We're going back to 2010, and by contrast, we're at this Fibonacci line, which is 693. We're pretty much on it. Therefore, we're now back to levels where we were finding the same level of resistance in 2010. And of course, well below the 2006 highs. Kind of makes you wonder how this is going on. Like, what are they doing? Are they doing constant shorts? I don't know, but the numbers don't lie, and this is what they're telling us. And what we'll do is we'll now go back to show you what silver looked like when this thing came into play. Because silver was, the SLV was approximately, well, it says 1290, so that's what the SLV was, and you have to make it a little bit more, not much more, but silver would have been a little over $13 when this opened up, and the chart back then would have been somewhere in here. This is when SLV came into play. But we notice this is May of 2006. In fact, I got the exact date when it did open, and that is April the 28th. So therefore, yeah, roughly in here somewhere. But look at where silver came from at this point. Silver at $13, and it broke from this 18-period average at around $7. We basically ended up seeing the market doubling in a nice fashion. Okay, so we had the situation where the SLV came in, people were hot about silver, and that's when it all began. Okay, now let's move again on towards a newer chart. And this is the 13-day SLV chart, but instead of the New York Times, the non-New York Times. Now, why 13 days? Why would I use 13? Well, I need 100 to make this chart. And there was about 1,300 plus days since SLV began, so that just seemed to work fine for me. And in reality, when you make these charts, it doesn't matter too much what the period time frame is, but more or less what these indicators, which is the moving averages, the upper bands, and the Fibonacci, show us. As well as just regular chart analyses patterns, sort of like, oh, we have this uptrend line that it managed to barely break below, and now we're looking to recapture it and extend the gains. That's another ways of looking at it. Within this band, of course, talk about majorly hugging it for a long period, coming back to the 18-period average of highs and back to this line. That's an extremely bullish sign looking for volatility breakout. Because the volatility level from here to here is a pretty decent one. Just hugging this barrier and closing above it a few times is strong. And basically, well, it goes from 45 to 70 during that period of time frame. So this is a very strong situation. This would have also started at the exact same level of 1290. Therefore, it's went from 1290 to 77, while the other one has basically lost major value. All right, 3 more charts to go, and they're all going to look pretty similar to this now. There's no dates anymore on the bottom, but there is important numbers to the right-hand side. And I'll go through what every one of these happens to be. The red line is SLV in itself. The green line represents how you would be doing if your decision was to always buy SLV at 4 o'clock and always sell it at 9:30, and that's all you do every single day when it's traded. You basically buy the close and sell the open. Now, the black line represents how much you are outperforming the underlying market, the silver market. And what's interesting is from this point here, which was at the 2008 bottom, to this point in here, which works out to the April top, or close to it, it came very close for SLV outperforming on the US time frame over the regular one because of what was happening down in here. But since then, we had the major crash, and you notice that you really never got affected too much by the crash. Now why was that? Especially when the crash, the big one, occurred from $49 down to $42 in like 20 minutes. Well, the reason why was A, when the market closed, it actually closed at around $46 an ounce. Because during the holidays that happened afterwards and so much other things, the market went higher to 49. And then when it reopened the next day, it was around 43, 44. So it only lost about 4 or 5%. And then all the moves afterwards happened on US soil. Therefore, that's why the market would look like this. Now, suppose you decided you wanted to even be more aggressive. You decided, and by the way, the numbers on the right-hand side represent times by 1. So, SLV, since it's been open, has gained about 3 times more from where it started. It started off at 12, tripled that to 36. That's pretty much where we're at now. Then you have this one here, which is 6 times its market, only by playing the non-US time frames, and you have outperformed the market double. Therefore, if you're ever trying to outperform the market, as long as you're over 1, you're outperforming it, basically. Okay, so now let's assume now that instead of only going long from 4 to 9:30, that at 9:30 you'll short the US market and cover your short at the end of the day. And instead of being up 6 times, you're up about 7.6 or so. But what's happened within this is you're getting hammered. You were at one point overperforming the market by 8 times. And then you got to the point of like 1.6 times. Now you've obviously hit some of the shorts since this point in here. You hit a lot of the good shorts when the stock or when the silver market was going down $2 a day. By shorting it, you'd be gaining that of $2 a day. Okay, let's finish this off by being that one person who decides, I'm going to go against the grain, go against the trend, and only buy silver at the start of the day. And, well, I don't want to be touched with any of these overnight gaps or anything, so I'm just going to stay in cash overnight, sell at 4, and buy at 9:30. Well, this is SLV. This is how you'd be doing. And this is how well you'd be overperforming the market. Have yourself a great day, everyone. Bye-bye.